Hi everyone and welcome to our market analysis videos here at Zenfinex. My name is Connor Woods and I'm the Senior Market Analyst at the company, providing to you daily videos on market analysis and educational content. Now for today's video I'm going to be covering the Nasdaq 100 index, which touched another all-time high yesterday. I'm going to be covering any potential risks with the Jackson Hole meeting due to begin this week, and then I'm going to move on to the chart and mark all the key levels to watch out for. Okay, so let's focus on the Jackson Hole meeting first and the effect that it could have on this Nasdaq 100 market. Now, for those who do not know, this is an annual and exclusive central banking conference to discuss really important policy matters. Now, for 2021's meeting, Jerome Powell announced that it's going to be held online, and it's going to run from Thursday to Saturday. But the main event really is going to be the speech by the Federal Reserve Chairman, Jerome Powell himself, scheduled for 2 p.m. GMT on Friday. So just a bit of background, stocks opened higher yesterday at the beginning of the week. This was because there are hopes really that the Federal Reserve in this Jackson Hole meeting, they may put off tapering its asset purchases until at least December. And the reason is because the latest wave really that we're seeing of the Delta variant of COVID-19 is starting to slow down the global economic recovery. Now, the Federal Reserve is expected to communicate its plans for slowing its $120 billion per month asset purchase program, which, as we know, really is the first step down the road towards this eventual interest rate hiking. However, there is a clear risk coming from the COVID-19 Delta variant. This is clouding outlook for economic recovery, as I've said, and if the Federal Reserve decide not to place too much focus on these COVID-19 risks, and they don't actually delay their tapering, then we expect this hawkish talk and this hawkish language to filter through to the markets. However, the worry is that the Fed will remove the support from the markets at a time where risk seems to be rising, and this could soften market mood. And therefore, this is why it's rumoured that they will delay the tapering talks, and from there we could keep buying the dips in the Nasdaq 100. Just on a quick note, sentiment was actually lifted by China's announcement on Monday that it had not registered any COVID-19 cases through community spread for the first time since July. Okay, so let's take a look at the chart now, and as you can see, it's the same old story for these US indices. The money inflows that we have going in there, I think last week the money inflows into US indices was at its highest level for about 9 weeks, which just goes to show where when things are in a little bit of trouble, where everyone wants to put their money. I mean, there's just so much money being flown into this market despite the risks that we have. And I've seen top economists talking about the risks we have from COVID and global outlook and things going on in China. Yet still this Nasdaq market just seems to just go straight to the upside. And it just seems that any little pullback we get, we have to treat as a real opportunity to buy. Because that's what it's done over the years, right? That's what we see all the time. And even more so at the moment we're seeing it. Now, it was quite significant. Hi guys, thank you for listening to this video. Just really quickly wanted to touch on a really exciting offer we have on the website. It's a limited time offer, and if you head over to zenfinex.co.uk, you will see the offer in front of you straight away. And this is that you can trade Forex on a standard account with raw spread plus zero commission. And now Zenfinex is also an FCA and no dealing desk execution broker. If you are interested in this offer, you can get in touch with the team by clicking learn more, or you can simply go to open an account where you can start the application process. Really, because we actually touched all-time highs about 3 different times here, and I didn't actually do this, but I was tempted at one stage to kind of sell from this level. Thought it was making, I thought this triple top would have been a nice opportunity to sell from. I would have had my stop losses just above the all-time highs, and I would have been stopped out quite comfortably, which serves me right really for, I guess, even thinking about selling this market. Now, the key levels really to look out for now is because what some people do is they see the market like this, they see that we've shot up to the upside, and they just think automatically a bit of FOMO kicking in, we'll just buy straight away. And that's not the way you want to do things, because you end up getting stung, like you see here, when you think the market's just going to do nothing but go up. We have to be patient now and wait for the dips in the market. And I do think that, first of all, obviously the 50-day moving average, which is this purple line, was respected perfectly. You can always use these moving averages, especially on the daily chart, as a nice clean support level. But for me, I like the idea of this daily order block. And I'm going to zoom in on the 4-hour chart just to see if I can find something that refines this level a bit further. But for now, you can see that we're from this candle we had a shoot up, and we actually had to break all-time highs, which would have taken some buying power. And as you can see, we're now trading comfortably into these all-time highs. Excuse me. Now, if I go down onto the 4-hour chart, and I just try and find potentially a level which we can buy from, and I think there's two really. We kind of have a couple of more 4-hour order blocks within this daily order block. We have one here, you can see, and we also have another one here. So I think the best thing for me to do is I'd probably put a 1% trade overall on this huge order block we have here from 15,000, the stop loss down at around 14.7. But I'd also want to put 0.5% on, just me personally, risk on these levels here that we see. More inclined to take the bottom one than the top one. I'll leave that down to your personal preference if you follow the same sort of strategy that I do as well. I do like the idea of this bottom one. There is some market inefficiency that still hasn't been filled yet. But alternatively, we could just run down into this one, which also broke structure, and then a bounce back from there. If I move back onto the daily chart, and these are our 4-hour order blocks that we have in here. I'll just label them all order block entry. I mean, the key levels to look out for in terms of buying take profit levels, I mean, really, you just would aim for all-time highs again. So whenever this market actually decides to stop running to the upside, which I think will be dependent on the comments coming from the Jackson Hole meeting that we have this week. So listen out for that. Other than that, it's about being patient there. If we're going to look, if the risks in the economy are going to start to filter through, and we do see a quicker asset tapering from the Federal Reserve than the market expects, then I do actually expect this. There is reason for this market to fall. Now, I'll be looking at 14.7. I'll be looking at a break of this order block level as any selling take profits, if I even can get a sell at the moment. I mean, you would never be selling from something that looks a bit like that, as you'll just be guessing blind. And then from there, another take profit level down at around 14.4. I mean, it would take a break of the 15 moving average, which is probably a bit optimistic. But for now, I do believe it's about being patient. I like the idea of these order block levels that are situated within this daily order block, but I do like the daily order block play as well, which is sitting at around 15,000, which is a nice psychological level as well. Really listen out for that Jackson Hole meeting as well, guys, just to see the stance from Jerome Powell and the Federal Reserve regarding the slowing down of their asset purchases. It will have an effect on the markets, and it's a reason for volatility as well. So that's it today for the Nasdaq, guys, and kept it nice and simple, some nice clean levels to watch out for. We're running to all-time highs. It's now a case of catching the next dip. As always, guys, make sure your notifications are turned on so you do not miss any of the videos that go out at 4 PM GMT 3 days a week. Continue to like and subscribe to the channel as well, which really helps boost the channel. Any comments you have, drop them in the comment section. We do always reply to the constructive comments and any questions regarding the markets as well. Other than that, guys, I'll catch you all for the next video, which will be tomorrow. Have a great trading day.